Which is live. This is Bob Desmond, and tonight's going to be a kind of a special night because I'm rolling out a new engagement feature, and I've been wanting to do it for a while, but events that have unfolded with YouTube of late, where they demonetized one of my videos, and they did so during the election as well, a bunch of them. I'm very hypersensitive at that time, and realized that I really need to begin to diversify away from YouTube just in case. So I'm going to be announcing a new. It's free, called the 30-minute Chart Club, and I'll roll you through what it's going to look like in a while, but we're going to begin as we normally do with the. Pardon me, folks. Sorry. With the opening price action of the futures, we're going to talk about some of the headlines that are coming out. We're going to talk about the economic data that is coming out as well this coming week. So let's begin. Let me share my screen. The futures are open, and we'll say hello to everyone. Okay, there we go. Boom, there we go. Okay, so the futures are open. We have the S&Ps. You're looking at a 15-minute chart, and we have a gap down. We are down fractionally, about 0.12%. We were lower. This is no great shock, because what I'm going to go to in a moment is a series of 30-minute charts where it showed that the market showed some weakness in the back half of the day on Friday, some selling. You even saw the volatility index perk up a little bit, net on the session on Friday and on the week. On the VIX was just a basket case. It did not do well at all. So right now, it looks like we're taking a bit of a breather here. We'll watch this rising lower band of support. Moving on to the mid caps. Mid caps about flat. The Russell 2000 down 0.15%. We were lower. So is this the beginning of something, a bit of a correction in equities? We've come a long way very, very quickly. I mean, Tesla, I believe, was up 40 points last week. Let's take a look at the NASDAQ. The NASDAQ down 0.12%, consistent with the S&P 500. So it looks like a little bit of the continuation of selling that we saw in the final minutes of trade on Friday, going into the new trading week. But we have a lot to concern ourselves with this coming week. Let's take a look at bond yields. Bond yields are down on the session. We'll go over the events that are going to be unfolding this coming week. Here's my dollar. Let's take a look at the U.S. dollar. Dollar is flat relative to the close. Looks like we're trying to move up here a little bit. I'm not going to be the least bit surprised to see some strength in the dollar this week. I went over that with members on the week ahead commentary to expect some strength on the dollar. And in fact, on the 15-minute chart, we have a breakout. Looking at the euro yen, the two major counterparties to the U.S. dollar, the euro is weak. We are barely holding on to a support level at around 108.9. Let's call it 109. The yen perking up here a little bit. It's been down the past couple of weeks. Is this the pause that refreshes? So here's our trading range. We're putting in higher lows. We did put in some higher highs. Now we're just languishing here on the yen. All right, so now that we have currencies reviewed, we can get a feel for how commodities should be behaving. And I suspect that we're probably going to see some weakness in gold. Let's go with energy first. Oh, wow. God damn it. Nat gas gapping down. We have a nat gas position to the long side. This is not what I expected to see. They could be blowing out stops because we are at historical support on natural gas. So I'm not going to panic here. I think that what they're doing is they're blowing out stop loss orders, scooping up nat gas. Let's put an alert up here. I want to see whether or not they recapture this support level. This is a 4-hour view. Let's go to the 15-minute view. You can see how they're taking it off the lows already. Let's take a look at oil prices. We'll stick with energy. I have gasoline in front of me. Let's go to gasoline first. Gasoline prices spiking up just shy of 1/3%. We're focusing a little bit more on commodities tonight, folks, because we have the Fed meeting coming up. And there's a debate. Do they raise by a quarter point? Do they raise by a half point? Do they go a full 3/4 basis point? I doubt they're going to do 3/4 basis point. I think the street is calculating in a half point increase to a quarter point increase. So gasoline moving up. What happened to my oil? There we go. Light sweet crude gapping up over 0.75%. This is not what the Federal Reserve wants to see going into this Fed meeting. Do we have home heating oil? I thought I brought it up. Home heating oil gapping up over a 0.5 percentage point. We remain in a long-term trading range on this 4-hour chart. All right, moving on over to precious metals. Gold is expected down on the session. Let's take a look at silver. Silver futures, wow, very, 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 very nice. They are up spot 4%. Silver looking good here. We have a breakout 15-minute time frame. Silver looking good. Let's go to agriculture. Now for ag, we're going to go to a weekly chart because we do not follow these closely day to day. Usually I only go over these on Sunday nights. So I want to get a feel for how we traded last week. Not so much worried about how we're doing right here, right now. So first is corn. And I'll be honest with you, I've already taken a look at these charts. And these are very, very bullish. Very, very bullish. I mean, there's no reason in the world not to buy corn right now. This is a weekly chart. We broke out here, failed here, rebroke out here the week of the 9th, and it looks as though we're getting ready to move up higher. Corn, very, very bullish. Soybeans, same deal here. We had broken out here the week of December the 26th. We're consolidating, getting ready for a move up higher. Wheat, a beautiful chart. We saw a bullish key reversal bar off of support, and it appears as though we're going to move higher across the ag spectrum. So that leads me to say, okay, do I want to buy an agriculture ETF like DBA? How did it do last week? Pretty good, pretty sweet. No breakout, but it's looking really good. Did we miss anything? I don't think we did Bitcoin. Let's go over Bitcoin really quick. Bitcoin had a really good weekend. It's up at current $745, 24,000 in US dollar terms on Bitcoin. Very, very strong price action. Let's go to some comments. Say hello to people. Jody. Welcome, Jody. Tim. Hey, brother. Pfizer is a steal at 43, Bob. You're probably right, but I have some issues with them. Paul, hello. Calvin, hi all. What's the king of all Apple going to do this week? We'll take a look at it. We'll definitely be doing chart requests today. NAS up 11% in January. Yes, crazy. And it looks like it wants to go up higher, to be honest with you. You know, I keep coming on. I'm saying that longer term I'm bearish, but right now I can't not be bullish. NG will get some legs under it eventually. Yeah, I think it will. I mean, not gas. You know, you take a look at it. Let's bring it up. I don't know if the weekly chart's going to bring up the historical support, but here we are. Yeah, it does. So here we are, and here you have a lot of historical support back here. So I think this is going to hold. I got some long contracts on NG. I'm not panicking. Cool. Yeah, we have long contracts on Boyle. Franklin. Hey, brother. Hey, Bob. The coming week, ultra cold Boyle has bottom. I think it has too. 77 man, 77. Sorry, CT, but the petrodollar is dead. What now? Gold back currency. That's my thought. Okay, let's introduce you to something that I've been wanting to put together, but I got motivated this week to make it happen. So, you know, when I do my analysis, many times I'll bring up a flurry of charts, and usually they're 30-minute charts, intraday charts, to see whether or not, you know, I have a quick swing trade, or do I have a breakout pending. What are the 30-minute charts implying? Because the 30-minute charts, they can be used for very, very short-term movements in a stock to trade, whether it be long, short, what have you. Case in point here, UNG, upper left. We have a consolidation. This appears ready to break out. This goes to our conversation earlier about natural gas and the fact that they're hammering it lower right now. I am of the opinion that they're blowing out stops. And in all probability, this rally off the lows that we saw on Friday is probably going to continue. Another observation, a 30-minute chart, Airbnb. Do I want to buy Airbnb here? I don't think so. You have resistance immediately above. Back here, Tesla. Look at this beautiful consolidation. And had you identified this and captured it, you would have enjoyed this bull run higher. Amazon, lower left, 30-minute chart. These are all 30-minute charts. And you could see that on Friday, I mentioned earlier that we saw some selling, and it manifested itself very, very bearishly for several stocks out there. And Amazon is one of them. It broke 30-minute support, and it also flashed an outside reversal bar. My guess is that Amazon sees a down morning on Monday. So obviously there are no guarantees, but the 30-minute chart is where I'm not a big day trader per se. I'm not good at it. I need to put thought into the trade. I like to understand where we are historically, and day trading requires really quick decision making, and I don't do that. But once we get away from the 5-minute, 10-minute, 15-minute charts, I feel more comfortable with the 30-minute chart, because a lot of that's where the volatility, that intraday volatility, begins to get smoothed out. And especially as you go to the hourly and the 4-hour charts, it really gets smoothed out. But it's the 30-minute chart. I call it the chart of truth. I don't know where I got that from. It just pops into my head, and I always go to it. And if I see an opportunity, like with Amazon, I'll do it. Okay, we have a breakdown here on a 30-minute chart. What's the setup look like on a 15-minute chart? Do we have a setup that's tradable? And yeah, I think that if they rally Amazon tomorrow morning up to upper band of resistance, and we get rejected and we take out the lows of Friday, or that this candlestick of Friday, well, I think we could be shorting Amazon, not for a long-term swing trade, but for a very, very short-term trade. In, out, that's it. Maybe be an overnight trade. But because Amazon, I think, is longer term is bullish. You take a look at the weekly chart of Amazon. I'm just bringing up Amazon because the chart is just so clear. Look at this price action on Amazon last week. You wouldn't want to short this. It's a beautiful setup. But what I think may happen here is that Amazon may pull all the way back to $100.78 and do a retest. That's a nice scalp if we short it. So I'll show you what it looks like. But there's a link below. Here's the opt-in email. So 30-minute chart club, this is free. You don't need to be a paying member. If you're already a member, no matter what, you're going to get alerted to when I either do a live stream or I do a quick video on the 30-minute charts. So if you're not on our opt-in email list, if you are already on our email list, you'll still want to enter your email address. This goes to a separate mailing list. So that way, those folks that are really not interested in getting this commentary, well, then they're not going to be included, and I don't want to spam their inboxes. So this link is in the video description area down below. So enter your email address. And there's a reason why I'm doing this. Besides, I want to add value. I want to get new customers to the Contrarian Trader, and this is a great way to engage with them, engage with people, and get them to know me and how I do things. But it also allows me to communicate. If I get banned, or if I decide, you know what, YouTube and I we're parting ways, or Twitter, or whatever I'm on, I have the email list. I can communicate with people. I can post videos on my website, and I'm not beholden to big tech. All right, so I do not want to fall victim of being beholden to big tech. They've been demonetizing my videos, and I thought I would be less angry than I was when they first demonetized the video. I'm more angry today. So it's not going to go away. It's just my instinct. It's just my nature. I don't like bullies, and I'm not going to be bullied. It's not going to happen. So, and I'll show you how I have it set up. So that way, if you're interested in what we'll be looking at, we'll be using TrendSpider, but for a quick snapshot, what I've done is right now I have, I think 31. Here's the special series of charts. I'm going to open all these. These are all 30-minute charts. And these are all names that are liquid, S&P 500 names, because a lot of these, they're trading high double digits. They're above $100. Many people can't afford these types of stocks. So I selected stocks that were highly liquid. If they're highly liquid, well, then if you don't have the capital to go buying the common shares, well, then you can go in and you could buy the highly liquid options with two penny wide spreads on those options. So, like Airbnb, here's the first one up. You could see that had we pulled this up late in the day on Friday, we would have realized that it was a 90. We had RSI above 90. This was a short all day long. It still remains a short. So we may be shorting Airbnb as early as pre-market tomorrow. Look at the volume here. You move on. Adobe, another one. If you were bullish on Adobe, you wouldn't have bought it on Friday afternoon. Why? Because the 30-minute chart would have told you at the upper band of resistance, avoid it like the plague, and in all probability, it's going to retrace back down to the lower band of support. And other names. I'm not going to go through all of these because we have a lot to go over. Disney, you're at the lower band of support here. If you wanted to buy it, okay, just use a tight stop right below. And perhaps it's going to move to the upper band of the trading range. I don't think it's going to. Actually, I think this is pretty bearish. The reason is that we have been hitting the upper band of resistance, but we didn't do it on Friday. It failed. It did not reach that upper band of resistance, and now it's retesting support. So this is not one where I would probably buy it. Our stochastics are weak and getting weaker. So this is what we plan on doing. I'll probably be doing this several times a week. And again, it gives me the opportunity to engage with new people, probably doing it on live streams. If not, it'll be recording. And of course, members are always included on it. And again, you don't need to enter your email address, members, because you automatically get the invite. So Twilio, 30-minute chart. These are all 30-minute charts. Look at this, double top and a new lower low. Twilio is a short going into tomorrow after this big bull run up. Is it a short for a week, 2 weeks, 3 weeks? Probably not. It's a short for a quick scalp and then out. So that's the game plan here. So again, if you're interested in joining up, it's free. Use the link below and just enter your email address. That's it. You're in. Okay. Hey, Bruce, how you doing, man? Is that Lucid? I don't think I've ever looked at that chart. In 4 months, the market is going to rip the face off 401ks across the stage. I take it you're bearish, I guess. Okay, let's begin. As a matter of fact, I'm going to copy and paste this. And you'll note, folks, YouTube demonetized that one video. And for the next, I think there's 25 days remaining, I am not monetizing my videos. If you want to enter your email address, go ahead, use that link there. Okay, so this is the big Fed week. And this meme is really indicative of what the market wants. They want rate cuts, but they're not going to get that yet. Way too soon. Earnings season coming up. Oh, excuse me. We have earnings coming up. It's earnings season is already here. Names that will probably be trading for earnings. Of course, they need to have implied volatility, expensive options. We haven't seen that. I mean, Tesla was one that had expensive options, but other than that, not many others. Exxon, UPS, AMD on Tuesday after the close. Those are certainly eligible for us to trade options on into earnings. We'll be selling premium, 2 standard deviation at a minimum. Meta on Wednesday. It's going to be a big week. Thursday, Amazon, Apple, Alphabet, Qualcomm. These are all names that we're going to be looking to trade earnings on. A big week for earnings season. So what's the Federal Reserve going to do? The debate is that it's going to be 50 to 75 basis points. Some are betting that there's going to be a 25 basis point move. Mohammed El-Arian, thoughts on why the Federal Reserve should hike rates by a half basis point next week as opposed to 25 basis points, widely expected. So what Mohammed is saying here is that the markets are expecting a 25 basis point rate hike. What if they don't get it? The NASDAQ moved 11% so far this month. So they're pricing in a pretty dovish Federal Reserve. Now, what if they do raise only by a quarter basis point? Is that rate hike, a quarter basis point rate hike, already priced into the market? So we need to be very, very careful of this market this week. Just because we get a 25 basis point rate increase does not mean that stocks go up. It could already be priced in, and I think you could pretty much argue that it already is priced in. Now, if we get a half basis point rate hike, does the market respond negatively? And God forbid they do 3/4 of a basis point. I don't think they're going to do that. Usually the Federal Reserve does not surprise. Unlike the old days, what they do is that they do pretty much, they guide the market's expectations and then they deliver on the market's expectations. Hi, I want to offer a promotion of your channel followers. Okay, thank you. So Wall Street is betting that the Federal Reserve is going to not be as aggressive on Fed rate increases. So here's a problem for the Federal Reserve. Government expenditures, the interest payments are going through the roof. And right now, the interest payments on our debt are equivalent to the military defense budget. Think about that. Something has to give. Either we cut spending, which they have no intention of doing yet anyway, or the Federal Reserve needs to get a bit more aggressive with their rate hikes because inflation is only going to skyrocket up higher. It may have paused for now anyway, but I just showed you the charts of oil and agriculture. All of them are beginning on a weekly time frame to move up higher. So while our last CPI report was pretty tame, the last PCE report was pretty tame, if we get a big rally on a China reopening in oil, in agriculture, well then, even your commodities, copper, which I did not go over. Copper's been on a tear. This is a weekly chart. Look at this. This is a bull flag setup. This is a continuation breakout pattern. Copper's a buy. It's going up higher. And it's not because the United States is growing gangbusters at all. China is reopening. Economic data coming out next week. We have it's jobs week, folks. We have on Monday, nothing scheduled. Tuesday, we have not much happening here. Schiller Home Price Index. But then on Thursday, we get the ADP employment report and the ISM manufacturing index. Watch out for quits. It is what it sounds like. How many people are quitting their jobs? We're also going to get, of course, the Federal Reserve announcement. Thursday, the weekly initial jobless claims, factory orders, Unit labor costs, watch out for that. Wall Street does not like a rising figure like we're seeing here. The expectation is 1.5%. Then on Friday, we get the pimp Mac Daddy of all economic reports. Those are non-farm payrolls. Remember last month, they ripped the face off of expectations. So let's see what happens this time around. S&P real earnings growth dropping like a rock. However, when you take a look at the valuation of the market, this is the Buffett indicator, which is showing is fairly valued, yet we are at the highs of the year thus far and measurably above historical trend. The Shiller PE ratio. We are just shy of 30 on the Shiller PE ratio. Think about that. Remember when the stock market began to correct? We were at about, what, 35, 37, around there? After all of the correction that we've seen off of the highs of last year, we're still sporting a PE of nearly 30. That's because real earnings growth is declining. So equities on a rear view mirror basis are very, very expensive. Now, of course, you're going to have people out there that are going to say, no, 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 you don't get it. You need to take a look at the valuation of the market on a forward-looking basis. I don't have to. I'd rather go with what the known is. I don't want to go with what an expectation is. I know what companies have earned and what their current valuation is in the rearview mirror on what they've already reported. But what you're telling me here with the S&P 500 earnings, price to earnings over the next 12 months, you're telling me that stocks are fairly valued right here, right now. That assumes that all the analysts have modified their estimates for these companies down, which they have not, in particular in consumer discretionary names. The consumer is dead. And that's, they have yet to ratchet down expectations in that space. We didn't go over this on Thursday night. Here's the Federal Reserve's balance sheet. And you can see that it continues to drop like a rock. And we are at lows not seen in quite a long time. Where are we at? 84. Around September of 2021. So it's good to see, but there's a long way to go. A long way to go. And here is the S&P 500 year-over-year earnings decline for Q4 2022 for the first time since Q3 of 2020. So we're seeing, this is by sector. Energy the strongest, materials the weakest. I'm kind of surprised with healthcare, but consumer discretionary, I'm not the least bit surprised about. I'm surprised that it's not the worst. Got some $52 calls on Campbell's Soup this week. I'm surprised there's still a standalone company. It's like Smucker's as well as another standalone company. I'm surprised they haven't been bought out. We'll go over it. Just throw the symbol in there if you could, Corey, if you could. Thank you, Jody. Thanks for joining. Uh, 77 man 77. Altua's renewable royalties say there's 7 possible research 2000. Okay. All right. Good stuff. They have a yield? I think I want to do some chart requests. Folks, before we go to the chart requests, I want to talk about the bubble in the used car market is real serious, and it's getting worse. It's a perfect storm. More Americans can't afford their car payments than during the peak of the financial crisis. Think about that. Think about that. With yields measurably lower than what they were during the financial crisis, owners of cars can't afford the payments. So I'm looking for a new car, but I listen to Lucky Lopez on YouTube. If you don't follow him, you really ought to. He's saying wait until Q3 of 2023 to then go into the market to begin buying a new car. So I'll be in there and I'm going to be picking a goddamn nice car because they're going to be giving them away. Look at this. New loans, new car loans versus new car CPI. Look at the cow. They paywalled me here. Come on, Zero Hedge. Now my mouse stops. All right. So look at this. This is the charge off for Discover. Look at the charge off. Oh, that's a forecast for 2023. The actual charge off for 2022, 1.82%. They're expecting about 3.3 to 3.9 charge off percent in 2023. So this is really just an illustration of just how weak the consumer is. And we're going to be looking to short the XLY, which appears ready to move up higher, to be honest with you. Let's bring up the XLY. We plan a whole bunch of shorts, but right now we're long. I do have a short on Netflix. Here's the XLY. I'd like to see them rally it up to around 153 per share. This is a weekly chart, and you can see that we're approaching the upper band of the winding down trend channel. I'd like to see them rally it, and a rejection. I'm going to set up an alert here. We're going to keep, you know what? I don't need to change this. 1 day passed. No, we're going to change this. Okay. We're going to keep this active for a while. All right. So our alert is set. We're looking to short the XLY, but I do think that we're going to press up higher first. Thank you, Tim. Appreciate it very, very much. All right. Let's do some chart requests. Get my trusty notebook out. That's Campbell's Soup, right, Corey? Yep. CPB. QQQ for the lovely Jody. SE. I know somebody wanted another one, an EV stock, Lucid, for Tom. All right, let's begin with these. And I got to check the members area. That would be nice. Make sure they didn't ask for anything. Okay. Larry, I didn't see this one from you. This is an old one. Let's go over it now anyway. ATAI. Did I forget that one, Larry? Okay. Thank you, Pete. Okay, let's do it. CNX, 77 man. CNX, isn't that Canadian Rail? Now you're going to satisfy my curiosity. CNX. Oh, no, CNX Resources. I thought it was Canadian Rail. I like this. It's flirting with a breakout. They tried to break it out back in June. It was rejected, and it's been consolidating ever since. And folks, we're using TrendSpider here, and you can see that where they rejected is right in this green line here. That's the automated trend line. That's the artificial intelligence working for you. I didn't draw that line. In fact, I don't think I've ever looked at this chart. And we do have another resistance level immediately above here at $17.77. I think ultimately it's going to get pierced and closed above. Stokes is still weak on a monthly time frame. I don't see a huge reason to go running in here, right now. If you wanted to scratch the itch and get long of a small position, I would have no problem with that. I think that the stochastics are beginning to hook up. These are not just two squiggly lines. These are lines that share with you a story. They tell you a story. And the story that they're telling you is that while, yeah, they remain weak, they may be getting ready to change course and move upward. And that's going to be a increase in momentum to the upside. So it's bullish. Daily view. Yeah, stay very small with your buying here because you have multiple. Again, I'm going to take the automated trend lines off, throw them back on. You have multiple resistance levels above. I think that it closed above $16.70. You could definitely nibble on it there. I'm loving the daily Stokes. They're telling a story. Higher lows. Now all you need are higher highs. And we have it. We broke out daily time frame, at least on the fast line. So CNX looking good. It's healing. It's going to take some time. So nibble now, and you get paid later. It's not going to be an overnight thing. CPB. So Campbell's Soup is a staples play. Now, nobody wants staples right now because it's a risk-on environment. But that's going to change at some point in time. Now, Campbell's Soup right now is at a very critical juncture because where we bounced on Friday was where we broke out above back in October of last year. So we've retraced 100% of that move above this resistance level in red. Weekly view. Good bullish key reversal bar on the week. Maybe it wasn't Friday. It was maybe earlier in the week that we tested that monthly support level. But a bullish key reversal bar. This looks good. I would want to see a breakout. We're not there yet. We're right at resistance. The stochastics are flatlining out. I think they're going to probably hook up. Actually, this is a daily chart. Sorry, daily chart. I skipped over the weekly chart. Weekly chart. We held support. Stokes are going in the wrong direction, though. They're weak and getting weaker. I would stay very, very small here. The problem is that, I'm bullish on the daily chart. It looks as though it wants to pop up higher, but your monthly and weekly Stokes are going in the wrong direction. They're weakening. So what happens is that when you see that, rallies tend to fade. Rallies fade. So you could get a nice rally in Campbell's Soup for a day or two, but then all of a sudden, it just evaporates because the macro picture on a weekly and monthly time frame, it's so weak. So at some point in time, it's going to get resolved. If you're looking to buy Campbell Soup as an investment, well, you're at a historical support level. If you're looking for stop loss, I'd be looking at the lows of last week at around $50. And what was the low? $50.45. You break down below that support level, you're coming down to a 49 handle on Campbell's Soup. QQQ. What can I say? I mean, it was this very powerful week. We're going into a time of the year. Let's bring up seasonality. Where it's a 50-50 market. You know, so it's a coin flip about whether or not on a seasonal basis, whether or not we're going to move up higher. But on a technical basis, taking a look at the weekly chart of the Qs, I would think that in all probability, this is going to get resolved to the upside. Might we do a pullback and a retest of the support level at around, let's call it 283? Maybe. But it looks as though we are primed to move up higher. Stochastics, bullish. Daily view. The daily chart looks good. Stair stepping higher. A good day on Friday, but take note of your Stokes. They're about as flat line to the upside as you can get. There's been a lot of juice pumped into this market. So be careful. And volume is not wonderful. So what volume tells you is the quality of the buying. Are you seeing a lot of institutions enter the market? Well, you're not seeing big volume bars. So no, you're not seeing a lot of institutions enter the market. You're seeing a lot of retail traders in there. You're seeing a lot of shorts get squeezed. You're seeing a lot of hedge funds putting money to work, but not necessarily the institutional buyer yet. Let's go to the 30-minute chart, the chart of truth, and take note of what happened on Friday. Strong all day long, and the final minutes of traded, hammered. So this is a story. This is a story. So expect a rally back in an effort to try to recapture 297. Qs may be a short for a very, very short-term period, not for a long-term period. Quick in, out. So I would not be a buyer right here, right now of the Qs. I would wait for a better setup. This is not the setup you're looking for. SE. C Limited. Weekly chart, bullish reversal bar, Bollinger Band squeeze setting up here. Note how tight the Bollinger Bands have been, and now they're beginning to widen out. So this implies to me that SE wants to move up higher. Stochastics, the momentum indicator, bullish. Momentum is building. Daily view. It looks as though that we're probably going to press up higher. Would I be a buyer here? We have resistance immediately above. Take them off, put them back on. That's the AI. I'd like to see a retest of 63.50. I wouldn't buy into a resistance level. I just can't do it. Stokes look good, implies that in all probability, this is going to head up higher. Does it break out? Not quite sure. And that's why I don't want to buy it right here, right now, because there's just not enough room for me to make money. I'm taking on way too much risk and not enough reward before I enter the trade, assuming that it doesn't gap up on Monday. Let's say I buy where it closed on Friday. Well, resistance is right up here at $70.59. Where did we close on Friday? We closed at $68.55. Way too much risk, not enough reward. I would pass on the trade. Longer term, I think that is going to get resolved to the upside. It is going to move up higher. Here's the monthly view. Thus far, with 2 trading days left to go, we are what appears to be ready to do a breakout on a monthly time frame. Another way of entering this trade is expect a retest of this breakout point next week, the week after, and that's at around $61.25. That would be interesting for me to get long of the stock. And we have a lot of reasons why you may see a shakeout in this market. Fed meeting, jobs data, a ton of earnings coming out. So don't be surprised to see a shakeout in this market. It's not a bulletproof market by any stretch of the imagination, and it's certainly not cheap. Lucid. Monthly breakout. Nice rally last week. We rallied through resistance at $10.84, and we closed there. Watch for a pullback. I'd be a buyer at the $10.84 mark, give or take. But I think they're going to do a retest of this, as noted by the topping tail. You saw some profit taking last week. I'm not sure when they did that. We'll go to an intraday chart. Take a look at the quality of the close on Friday. Daily view. Nice breakout on Friday. $30-minute chart. No, this is actually pretty good, to be honest. What they did is they gapped it up and into the 3rd standard deviation Bollinger Band, where you're not supposed to be. And what's bullish about this chart is that many times you'll see a stock that goes ripping through the 3rd standard deviation Bollinger Band, RSI above 85, 90, and it just gets taken to the woodshed. This stock did not. Yeah, it pulled back, but what it did is it took the beating like a champ, right? It got it overbought. Shorts moved in as they should have. And what you didn't see was panic. You saw firm hands here on Lucid, and they are consolidating it. And it looks as though they're getting ready to pump it up higher. I'm kind of bullish on the stock. That doesn't mean it can't do a pullback and a retest of the support levels mentioned, but I think that this is pretty good price action for a stock that got way, way over its skis Friday morning. ATAI. I don't like this chart. This chart to me is very, very bearish. We broke through support like a hot knife through butter the week of January the 2nd. They've been limping it back ever so slightly. They're probably going to rally it up until $2.04, and then it's probably going to break lower, because this reminds me of a bear flag setup. And my guess is that it gets resolved to the downside. Daily chart. It already started on a daily time frame, broke support. I would avoid this stock. I would avoid it like the plague. And I really don't trade stocks that are under $5 per se, because they have ongoing concern issues. What do you think about the banks? I like the banks. No, I didn't talk about them, Paul. No, we could talk about them. We could bring up a chart of the XLF, and since we're on the topic, if I don't do it now, I'll forget. So let's bring up the XLF, and I didn't forget about everybody else's requests, so I'll definitely get to them. So let's get off the daily chart. So on the week ahead commentary with members, I went over the setup for bond yields. Now, bond yields have been weak for the year so far, and that's allowed equities to rally up. Now, the banks generally do not like lower yields because it impacts their NIM, net interest margins. They make more money on their loans when yields are moving up higher, and they're not giving anybody more money on their deposits. They really don't want the deposits. They got plenty of cash from the Federal Reserve. So the banks, I think that yields are probably going to begin moving up higher this week, because last week we closed up fractionally, and it was a doji star formation, a sign of indecision. And that implies that the trend, which has been recently down, is probably going to reverse. Do we break out and take out recent highs? I don't know. I'm not that smart. But it looks as though we're going to get a counter trend move, not on just the yields, but also on the US dollar as well. And that's why I'm worried about gold, silver. I'm kind of surprised to see silver up right now. I like the chart of silver. Gold, I think, is going to come under some pressure. As much as I don't want to say that, we don't speak our book here. We say it like it is. So the banks are looking very, very good. Back to the banks. What do yields have to do with the banks? Well, if yields are going to move up higher and the markets are able to now absorb vis-a-vis layoffs and cost cuts, higher interest rates, well then, if we can get the S&P 500 to continue to rally with rising yields, I don't see any reason whatsoever why the banks wouldn't be leaders in that sector. And in fact, last week they broke out. So the banks are looking pretty good here as an investment. And I would watch yields, because as yields move up higher, and so long as the S&P 500 doesn't buckle, the banks can move up higher. Let's face it, they're printing money. Well, the Federal Reserve prints the money and they give it to the banks to lend out at obscene rates. All right. You're welcome, Jody. Para for Tim. Dane, we have a few minutes, so we can go over yours, okay? I'm gonna cut it off here. Okay, we're gonna leave it off with Para, BA Meta Shop. Para. Okay, Paramount Global. You're welcome, Paul. Anytime, pal. One short IMVT, looking for a big drop. All right, you got me thinking. What's this IMVT? You shorted it. I love shorting. It's pretty weak. Short term, you have a lot of resistance above at around 22 bucks a share. I don't know if I would short it though. It doesn't look like a long-term short, but I'll tell you, on a daily chart, if this breaks down to new lower lows on Monday, Tuesday, well then yeah, it's definitely going to be moving lower down to around, I would think, 1571, around that level. All right, back to Para. Folks, we're using TrendSpider. I don't know if I put the discount code below. Go over to their website, discount code CON35. I just put the email list for the 30-minute chart club this week. Para. Good looking chart, daily time frame. Let's go to the weekly, get a feel for it. Beautiful continuation breakout last week. The stock's going up higher. Daily view. very strong, bullish on para. To initiate a new trade, I would not do that. It's extended too far away from the breakout point. But if you're long of it, I would stay long of it. I think there's more money to be had here. BA. Didn't Boeing report last week? Very tight consolidation range here. That's a daily chart. Usually I begin with the weekly chart. Let's go there. Yeah, we have a multi-week consolidation. I think that Boeing's going up higher. There's a statistic out there that by 2027, you will have a doubling of flyers from the immediately pre-COVID levels. So think about that. Twice as many flyers in 2027 than what you had in 2019. That's a huge, huge metric. So if that's the case, I don't see how Boeing doesn't win out. I don't see how GE in particular, they make the engines for Boeing. I like this chart better, to be honest with you. And I never thought I was going to like GE again, but man, I'll tell you, GE is en fuego. So it's looking really good here. Boeing, GE, I think they're going up higher. You are welcome, Franklin. Have a good night, my friend. Tim, you are very welcome. And folks, I know people cut out usually around 7 o'clock. Thanks for being here. I really appreciate it. We have 2 more to go over before we shut off. But don't forget, head on over down below, link below. In fact, I'll repost it. The 30-minute chart club. It's free. And I'm doing this to build my email list to get away from, so I'm not beholden to YouTube and their subscriber count, as well as engaging more in one-to-one sessions with a group of like-minded traders. And if they like me, they feel comfortable, well, then maybe they'll become a customer or a member, as I like to say. So please sign up. I don't spam. I don't pull any nonsense like that. Sign on up, and we'll probably begin as soon as tomorrow, probably after the close. All right, let's wrap this up. We'll go to Meta. Meta's looking good here. I mean, it's had a heck of a run. What was the low? $81 a share, if not lower. But what was the low here? Low $88 a share. So yeah, really nice. I think that there's more room to be had here to the upside. They are reporting this week, I believe. Yes, they are reporting this week. Strong day on Friday. Let's go to that 30-minute chart. Because it looks as though they caught it on. Yeah, they did. So if you're watching the 30-minute chart, you wanted to buy Meta on Friday afternoon, excuse me, the chart would have told you, no way. Way too much resistance above. It's going to back off. Sure enough, the final hour of trade, it did back off. It looks as though we're going to get a further pullback on Meta. I would not be a buyer on Friday. Excuse me, Friday. I can't believe I just said Friday. On Monday morning, I would allow for it to hit one of 2 support levels. So actually 3. The 20-period moving average at around 149, or this support level here where we bounced off. I would not buy it here. Let me rephrase that. I would watch to see whether or not this breaks. This could become a short, very short term if this breaks this support level. But ultimately, I like 146. Let's call it 147 because it is rising. 147 per share. Stokes are very overbought, and now they're beginning to roll over. I would avoid this one very short term. Last one up, Shopify. Weekly chart, massive breakout last week on Shopify. Now, the options are cheap on Shopify. So if you don't have the capital to put to work on a $50 stock, think about buying the options. They are very, very cheap. We bought puts on Netflix, very, very cheap. So it just makes sense. It's a more efficient use of capital to buy cheap options rather than buying the common stock of a stock that probably requires 60%, maybe even 70% margin requirement. So think about buying call options on Shopify, but go deep out of the money, not out of the money, go deep out in time so you avoid that time decay. Don't buy weeklies, don't buy 1 month out, 2 month out. You got to go out 80 days or more, please. You don't want that time decay. So it looks as though it's probably going to head up higher, but first we may get a retest of support at around $58 a share. Daily view. Here's your resistance level to watch up here, $55 a share. I would set an alert up there. I'd be a seller of Shopify into that resistance level. You still have about $5.50 to go before you get there. Good risk reward entry play here, but I would wait for a pullback and do not go buying if they gap it up on Monday. God forbid. Do not go chasing the stock. Yeah, let's go take a look at I want to take a look at Nat Gas. Nat Gas opened very, very poorly. We'll leave it off with this. Yeah, I think they're going to rally this off the lows. All right. And with that, folks, don't forget, please sign up. 30-minute chart club. It's free, no charge whatsoever. And tomorrow night will probably begin. So I look forward to doing that with you folks. Thanks for already opting in. And thank you for being here. Awesome crowd as always. Have a very, very profitable trading week. Thank you for being here. Like, subscribe, all that good stuff. You know what to do. And I will talk to everybody tomorrow night. Be well.